consumer confidence falling to its lowest level in many years says a lot of things about how consumers are feeling right now. It doesn't always line up with how they're actually spending their money, but what we saw from the conference board's read on consumer confidence for current expectation was a fourth consecutive decline in that index. But what was even more troublesome was future expectations. That reading fell to its lowest level in 12 years. The index came in at about 65.2. The baseline for that reading is 80, so anything under 80 supposedly signals a recession coming. So it's the future expectations or what consumers are very concerned about. If you looked at why, it's everything from tariffs, which could possibly increase prices, and really the labor market. If you looked at expectations for what consumers are expecting for labor coming up in the next 12 months, that reading was lower as far as how many jobs do you think will be available, or do you think there will be more jobs available in the future than there are now? And that reading decreased to about 16.5%. Last month it was 18.5%. So we're seeing consumers a little more worried about their jobs, and not only keeping their jobs, but if they were to lose one, not so confident they could get another one very quickly. Consumers still out there and spending for the most part, but we can see some uncertainty creeping in there. As we've seen prices tick up and increasingly inflation staying sticky, the U.S. consumer has continued to spend, and that's what we're known for, right? Like 2/3 of our GDP is consumer spending. Consumers are very good at spending, and that is part of what makes the U.S. economy very strong. But like I said, we are starting to see some cracks, not only in sentiment, but in credit card delinquencies. So I follow the New York Fed's quarterly report on household debt and credit, and we are starting to see debt creep up. It was up about 0.5% in the fourth quarter from the prior quarter in the prior year. And then if you look at some of the delinquency data, mainly credit cards and auto loans, we are seeing delinquency rates creep up over 30 days, and even some in deep delinquency 90+ days. So the consumer's feeling less certain. They are still out there buying to some degree, but they are racking up that credit card debt in the meantime. And so it'll be really enlightening to see over the next earnings season what some of the big box retail names are saying. One thing that was in the recent Dollar Tree report was that they are seeing more higher income folks trading down, coming into Dollar Tree, and that they've seen this trend. There's a value-based consumer that's out there looking for a bargain, and we've seen similar comments from Walmart as well.